Boys and girls, welcome back to the mathcenter.com. Here, this is a continuation of a series of videos I've done to help you do some revision for your coming paper 1 of your accounting exam 0452. I think paper 1 exam, paper 1 for your accounting. I think your exam, it depends on whichever region you are, but I think this part of the world, this zone 5, I think, the paper 1 is on the 10th of November. Okay. In my earlier 2 videos, I've talked about what to do, how do you handle paper 1, some tips, so you can go and look at it. In this video, let me continue with some of the accounting, some of the paper 1, the multiple choice questions. But briefly, remember, your exam is 1 hour 15 minutes. Attempt all questions. Attempt all questions. As you do the each question, you must check the answer. And for the questions that you're really not sure, you circle them, come back to it quickly once you've done all the ones that you know, and then quickly attempt it. Kick out all the wrong answers and zero in on the best possible answer. Okay, you have 35 questions in a relatively short time, 1 hour 15 minutes. Please attempt every single one. Do not leave anything blank. Okay, I think in the next video, for the next one, I'll remember to talk about some of the tips for you should have when you're facing paper 2 accounting. There's a way that, because I've done so many accounting exams, practicing as a CPA, so I talk about it, so to help some of you young people who are taking these exams. Sometimes the tip seems so obvious, but actually it's not. So hence I will talk about it in the next one. Okay. Well, before I forget, do give us a like and share and subscribe to our videos. We are called the mathcenter.com, and we specialize in preparing kids for IGCSE, A levels, IB, maths, accounting, physics. Okay, plenty of free promos too, videos on our site. If you like what we do, then do share and do subscribe to our courses. It helps us, encourages us to keep going on. All right. So okay, let's start. So for the earlier questions, you have to look at the series videos. In this third series, in this video 3, I call this video 3. I like to take a look at a couple of questions here. Let's take a look at this one. A trader's year end is 30th of June. During the year, he paid 6,200 for heat and light. Okay. At 1st of July, the amount owing was 520. The charge to the income statement was 6,500. The best way to do this is just to do a T account. All my students know. So let's take a look slowly. The year end, 30th of June 2018. During the year, he paid 6,200. That means from the bank, let's say, he would have written checks totaling 6,200. Credit bank and debit here, 6,200. Now at 1st of July, which is the beginning of the year, all right, beginning of the year, the amount owing, we owe electricity and heat and light. So that is a liability and accrual. So current liability, so it will be on a credit side. This will be on July the 1st, 2017. Okay, and we paid during the year a total of 6,200. Okay, now the charge to the income statement. Now this is an expense, so obviously here in the income statement, we will have credited heat and light 6,500, and we will have debited our income statement itself 6,500. Okay, so what was the balance brought down? So taking my calculator tells me these are questions that I've done with my students, so I know the quality of the questions, hence I like it. Okay, on the right hand side would be obviously 7020. Left hand side should also be 7020. Therefore, you have a balancing figure of 820, and this is called balance carried down. This is a balancing figure. At no time is this debit balance. When you bring it down to 1st of July 2018 of next year, it will be on the credit side, and therefore this is the amount that we owe the utility company, 820. Okay, and so your answer is 820 credit. Why is it credit? Because 1st of July It's on the credit side. Okay, so that's quite straightforward. Okay, quite straightforward. Okay, you can replay this video to listen again to my teaching if you want to, or to hear again. All right. So now I'm going to rub this place a little bit because I need some space here. Okay, you can replay that. Okay, let's go. So the following figures have been extracted from the manufacturing account of business. You see, it's not just a long question that I can ask you paper today. I can ask you a very short question. What is the production cost of finished goods? So the production cost of finished goods will be when you just keep adding on all the costs which is incurred in the factory. Remember, of course, you start with prime cost. Prime cost is the cost of three types of expenses incurred in the factory. They are mainly the direct costs, direct material, direct labor, direct expenses. It adds up to something called prime costs. All right, just a teaching bit there. Direct labor, direct material, and direct expenses like royalties together adds up to something called prime costs. So 85,000. Okay, then you have factory overheads. Those are expenses incurred in the factory, which you can't split into per unit of item that you made, right? So they are just grouped together, like rental of a factory, electricity, salaries of managers, right, who are paid monthly, not by per item that they produce. So 1890, here's 100,000. Okay, now you have work in progress, goods that are finished halfway. So here you have opening work in progress, which is 6,000. And you also have closing work in progress, goods which are complete halfway and carried to the following year to be completed in the following month, the next new financial year. So 6 less 4 is 2,000. And so your total expense is 102,000. And this is your total production cost. Okay, so total production cost is 102,000. And that's the answer. Okay, so I'll see you again in the next video 4. Let's keep my videos very short so you can replay it again and then learn it in bite sizes. Okay, I'll see you soon and I'll do a few more. Okay, don't forget to like and share and subscribe to our videos. I'll see you. Bye-bye.